네, 이렇게 비트코인과 관련된 이슈들 체크를 하고 월가 트레이더 버니의 미국 주식 시간으로 돌아왔습니다. 오늘 준비해 주신 내용은 이 기준금리를 계속해서 올려야 한다라는 이야기들이 연준 의원들 입에서 거론이 되고 있는 이 실정에서 인플레이션과 경제활동 관점에서 앞으로 경제 흐름에 대해서 전반적으로 좀 짚어주신다고 합니다. 하반기 제대로 어떤 전략을 가지고 시장을 대응하면 좋을지 고민이신 분들에게 도움이 될 것 같은데요. 준비해 주신 내용 함께 보겠습니다.
So we know that inflation right now is a significant problem in the United States. We just had a CPI release on Friday, and that showed significant inflation, a little higher than expected across the board. But I also think that the CPI and PPI, Consumer Price Index and Producer Price Index reports are a little bit lagged, okay, in terms of let's look forward thinking. Let's think about where we're going to be down the road, because my comment was in the second quarter we should see the peak inflation and we should start seeing lower and lower levels of peak inflation going forward. Not necessarily that inflation is going to go down, but that the magnitude of the growth is going to go less. And what we can see is in three different sectors right here, in chips, in shipping index, and in fertilizer costs, we're starting to see a rollover in prices right now. So even though we have a high CPI index, some of the things that were driving some of our problems here are starting to roll over. Another thing we want to look at is earnings per share growth. And what we can see is in the first part of this year, we've had really flat earnings per share growth. So companies are reporting flat earnings, but the anticipation right now, still for this second half of this year, whether we get it or not, is a substantial number of positive earnings experiences. We'll see if that happens. We'll see how good the forecasters and the analysts are, but right now they're looking at substantially higher growth rates in earnings per share. When we want to look at a lot of times we think about things in terms of the problems in our economy, whether we're seeing higher prices, higher inventory levels, higher warehouse productivity, capacity, and prices. So what we want to think about, we constantly think about numbers relative to previous, okay, and how the changes are. And we're starting to see some slowing of growth. Everything here is pretty much growing still, contracting over here on warehouse capacity. But the rate of change, we're starting to see slower and slower rates of change. We need to continue to look for that over time. But I think we're starting to get into that peak area right now in terms of inflation. We will not see a rollover, I believe, in gasoline prices. I think that will be high all the way through the summer. We talked about Target before and how they built up unwanted inventory, and we can see that Target and Walmart have done the same thing. This is the percentage change in inventories. And this is what caused Target's price to really go down so significantly after their earnings release. But what happens in this space, okay, is that they're able to discount prices and move the stuff. So what happens is in an environment where Target, Walmart, those high number of stores, big sales companies, when they move inventory, they say, okay, we're going to say prices are down 25 to 30% at point of sale, and we're going to be able to market that stuff and get that stuff moved out. For the stuff that doesn't move out, they notch down to another 15 to 70, 75% of prices, and people wind up buying it because they're able to buy stuff at prices that they're not going to see again for a while. Target's already currently in that point of sale discounting mechanism. They made that announcement a week ago that they're going to start to basically reduce prices, offer sales to move inventory. Now, here's an interesting observation. Bank of America, huge bank in the United States, okay, what are they seeing within their banking customers? And what they're seeing is credit card and debit card spending was up 9% in May. total card transactions were up 7%. Okay, so they're still seeing purchasing power. Now, at the times in the recession, that purchasing power is reflective of the fact that they're using their credit cards to be able to spend because they don't have any other way. But when we look at their bank accounts are higher than where they were before the pandemic. So they're not relying on their credit card spending to be able to carry them through. They're actually spending because they have the money to spend. So when we look at household savings and checking balances, we can see that, yeah, they're coming off a little bit of a peak, but they're still much higher than where they were pre-pandemic. Okay, so their savings and checking account balances are better. Okay, there's total spending. Okay, they really cut it down at the beginning of this year, but that's in the winter for the northern half of our country, and they've been constant pretty much throughout. So they're spending okay relative to the last 4 years. When we break it down and we look at who's doing that spending, what we're seeing is people with more income are spending more than people with less income, which is another good thing. So we don't have a complete problem where the people relatively with less income are spending more and driving that whole thing. When this is higher than this, that's because people are using their credit cards to be able to get through. The other thing we want to look at is year-over-year retail sales. And this is on basically a short-term basis. They're still hanging in. So the consumer is still spending. He still has money in his bank accounts. He's spending more with his credit cards and debit cards. And his income level, is probably okay if the retail sales is still going all right. Now, when we get into a recession, we have the Philadelphia Fed does a survey all the time, and it's a coincidental index. Okay, and I cut this at 50%. So some of these go higher than 50, but at 50, that says and this is on a state-by-state basis, and we have 50 states. So this is how many states are reporting decreasing activity. Well, if there's nobody reporting decreasing activity, it's at 0. Okay, if there's everybody reporting decreasing activity, it's way down here. It's at 50%, so when nobody's there. And what we see right now is there are no states reporting decreasing economic activity by the Philadelphia Fed Coincidental Index. We would need about 5 to 7 to 8 states reporting poor activity, declining activity for a period of 5 to 7 months, because a recession is 2 consecutive quarters, so that's 6 months of declining activity. But we still don't have any states reporting declining activity. I know that everybody is talking about a substantial recession coming, but we're continuing to monitor it, and we're not seeing that yet. And finally, what we want to look at is that the New York Fed, not the Philadelphia Fed, but the New York Fed reports a supply chain pressure index. How much price pressure is in the supply chains? And what we can see is that even now, after we have the Russia-Ukraine problem and China with their lockdowns, but now their lockdowns seem to be opening up. Their country seems to be opening up more. Shanghai was in a total lockdown. It's not anymore. And I think that as those lockdowns filter through this index over the next 3 to 6 months, the price pressures in that supply chain are going to continue to abate. So overall, I'm not trying to look at the CPI and the PPI. I'm trying to look forward to be able to understand where I think future PPIs and CPIs are going to be, because those index numbers down the road are going to be driving us as much as anything else. The CPI and the PPI numbers are almost like backward looking at what happened last quarter.